Welcome to the Advanced Freelancing Podcast. Every week, you'll hear strategies for building your online service-based business your way. And now, here's your host, veteran freelancer, author, and TEDx speaker, Laura Briggs.
Welcome back to another episode of the Advanced Freelancing Podcast. One of the most asked about topics in the freelancing world is what on earth you're supposed to do with your finances. It's not something we really learn in school. Unless you went to business school, you probably don't know how to set it up. And if you're anything like me, you've had it for years or even months set up where you're just trying to survive one day to the next, and you're not really sure if you're doing the right things to capture and organize your finances and also plan for the future. So this episode is going to be really helpful for you. My guest today is Meagan, and I'm so excited to have you introduce yourself to my audience and tell us a little bit about how you got into doing bookkeeping and finances.
Yeah, well, thank you so much for having me. I'm really excited to talk to your audience today. Like you said, my name is Meagan Hernandez, and I do have a background in accounting and taxes. I was in the industry for about a decade and kind of worked in the corporate setting. And then started my business about 2 years ago. But then, working in corporate and working for yourself are quite different, especially when you're in the online space and you're figuring out how everything translates to the cloud and everything like that. So I started doing bookkeeping because I saw a need for small business owners, people just getting started that didn't really have a background in business, didn't really have a background in finance or anything. They just had a passion for what they were doing. Either they had a product they were selling or they wanted to do coaching. So they had their skill set, but they forgot that there's all this legal and finance stuff in the background. So I've really loved and enjoyed working with small business owners and entrepreneurs and freelancers just getting started to make sure they have everything in place.
I love that. And I think that sometimes with things like this, because people are so all over the place with where they're at with their finances, it's always best to just start at the beginning, right? So if you are talking to a freelancer, whether they're 2 months in or 6 years in, and they just have this gut feeling that their finances are not organized, where do we start with stepping back and going, okay, like this is the quarter or this is the year that I finally get on top of my finances once and for all? Where is the 101 version?
Yeah, so I'm so glad you asked that because you're right. It's pretty much the same conversation, whether someone is just getting started or they've been in business for a while, but haven't really gotten some of the root or some of the core things in place. So I do have some tips that I like to give, and it's the same thing I would do like on a financial consult that I would get on the phone with somebody just getting started. And I call them my 5 business tips for online entrepreneurs. And again, it's good for people just getting started or kind of wanting to bring it back to the roots. So the very first step is actually something not even technically in the financial realm, but it is choosing a business entity. The reason that is the very first step is because it sets the ground running for how you need to track your finances. So you have some options of how you're going to set up your business. If you do nothing, if you just start right off the bat working with clients, you are by default considered a sole proprietor. And that's not to say that you don't need to get some things in place, like possibly a business license or certificate of operation, anything like that, but you are kind of operating as a sole proprietor. The next option you would have is a single member LLC. And that's where you start to get a little of the legal protection. But again, in order to have that legal protection, there are certain rules you have to follow in how you're tracking your finances. And if you're not following those rules, which we'll talk about again in a second, then the legal side of it is pretty much null and void. And if you were to go to court and be in a legal dispute, unfortunately, you might not win if you're not following some of those rules. So that's why it's super important to know how that comes into play. And then just knowing that which business entity you choose, having an awareness of how it's going to affect you on the tax side. For example, sole proprietor and a single member LLC, they are taxed the exact same way. They are taxed the exact same way. there is no tax benefit for having an LLC over a sole proprietorship. It's just that legal benefit that you get. There are other options as well that you may have heard of: partnerships, multi-member LLCs. That's where if you want to bring your spouse into it, some people think that if they have their spouse sign on to their business entity, that it's still just operating as themselves. That actually sets them on a totally different path. There's different taxes involved. There's different rules and requirements involved. So just be aware of that. If you bring someone on, even if it's your sister, your child, anything like that, it does make a difference. And then, of course, you could set up a corporation. You could, on top of it, do an S Corp, nonprofits. So you have some options that you want to look into, but that is the very first step, making sure you choose which one is going to be right for you and knowing how it's affected on the tax and finance side.
I think that's a really good place to start. Now, when I started, I was just a sole proprietor, which I think most freelancers are by default. Would you recommend that you kind of start and stay as a sole proprietor for a while until there's a legitimate reason to go elsewhere? Because I know some people who start freelancing, they're not sure it's going to be their full-time thing. They might just be trying it out. Is it worth the time and energy to, say, create an LLC or, kind of go even farther by creating an S Corp or something like that? What are the factors that we should consider basically when it's like, okay, I've been a sole proprietor. How do I know when I need to go to one of the other types of business entities?
Yeah, I think it's perfectly fine to start as a sole proprietor to see, are you going to get clients? Is this actually going to pan out? Obviously, the hope and the goal is that it will, but there are fees attached. There are fees attached to setting up an LLC or any of the other legal entities, business entities. So I myself, even knowing all the tax side and the legal side, I myself just started as a sole proprietor as well. And I probably didn't get my LLC until 3 to 4 months in, until I was working with a few clients. And keep in mind as well, I'm an accountant. So I have work that is at a little bit higher risk of some of those legal, legal disputes and things like that, where some other type of industries, it may not be. You might not find yourself in a scary situation with a client if you're doing like, graphic design or something. It's a little bit more easygoing. Whereas accounting, it's dealing with the finances. So I did want that protection as soon as possible. So that's something to weigh with your industry, figuring out when you feel like you need that extra legal protection. And of course, there's additional protection you can get as well with insurances. There's errors and omissions insurance that you can get to protect your work on top of the business entities. Now, I will point out that an S Corp in itself is not a business entity. It is strictly a tax election. And it is a tax election that you can get with an LLC, a partnership, or a corporation. You can't get it with a sole proprietorship. You have to have that LLC in place. So a lot of my clients, that's when they decide to go get the LLC, is kind of they can have that gateway to get the S Corp. And the S Corp starts to be beneficial once your business is to a revenue level that you're starting to feel profitable and starting to feel like you can keep some money in the business to help build it, that you're paying yourself a good salary, and you actually need some additional tax benefits to keep those taxes down because you're getting so much of a profit. That's one reason to consider an S Corp.
That's really valuable. I know I didn't consider an S Corp for quite a while. It felt like it was going to be too much work. And then I had a financial expert walk me through it 1 year, and we kind of figured out with all of the work put into it versus what I would save on taxes. He kind of recommended right now where you're at, you don't need it. But then the very next year, because we were generating more money, they were like, oh my goodness, you need to do this immediately. So yeah. I would imagine having a good relationship with your team of financial experts, whoever that ends up being, is probably an important part of making sure you're doing the right thing. Besides an accountant or CPA, who else should we have kind of in our financial corner?
I definitely would suggest having someone oversee the bookkeeping, whether it ends up being your tax professional or you get some in-depth training yourself. A lot of businesses, even when they're very small, making just like four figures a month, still like in $4,000 to $5,000 range, it starts being beneficial to stay on top of your bookkeeping then, because it all builds from there. And when you're first starting out, you want to make sure everything's in place, because it's going to matter later when you want to tell the worth of your business, which again, we'll talk about it again in a minute when we're talking about some of the specifics of what you can do to stay on top of it. But a bookkeeper or somebody looking at your bookkeeping, at least, that is a good person to have right away, as well as a financial planner, someone that is specifically looking at retirement benefits for you, different IRA accounts, bonds. That scares some people and they think they're not ready for that. But the sooner that you can start getting some of those things in place too, since you're a business owner, you're working for yourself, you don't have an employer anymore putting into retirement for you. The sooner you can set up some of those things to start accruing interest, the better. And typically that is a separate role, a financial advisor or financial planner that is going to be separate from a CPA or an enrolled agent or, a regular tax professional.
That's so helpful. Thank you for breaking that down. So once we have our business entity decided, what is our next step?
Okay, so the next step after you get all of that in place is going to be to open your business bank accounts. There are some banks that do require you to have an LLC or higher in place in order to open a specific business account. But it's good to get one, even if you just have a sole proprietorship, for a couple of reasons. One, because it helps keep that separation right away between business and personal to help you kind of see how your business is truly doing, financially. But also the bank likes for you to have a business account if you are actually operating a business from it. They don't really want you to commingle the funds anyway. And if they did an internal audit and they saw that you were running a full business on a personal account, they could freeze your funds. They could, they're not going to assign any penalties and you're not going to have like legal action, but they will tell you to open the business account. So it's better to do it sooner versus later. And again, when you have the LLC or higher, there is that requirement to have the separation with business and personal. As well, you can start to think about right away putting some things in place to make sure that you're managing your money in the best way. And something that is really popular right now is this method called the profit first method. And I do like to follow it, a similar method with some of my clients. I kind of make it more personal to their specific businesses in how we follow it. But, you're setting up at least one business checking account for, the daily money coming in and out. We're setting up a savings account to save for taxes. There may be a big expense that's going to be coming up, like you need to purchase a new computer or a printer, something like that. So you can start to save money towards those things. You want to make sure that you're paying yourself, which again, we'll talk about more in a minute. But you can start to see that more clearly and get more of a consistent plan in place for paying yourself and seeing the profit. So it's just helpful to get those bank accounts all set up in the beginning. And it does make it easier once you get on an accounting system so you can have everything kind of flow more smoothly.
Hey, if you're listening to this episode, then the 6-Figure Freelancer book is available for pre-order. The book drops on October 20th, 2020, but you can pre-order the book now and get 4 special bonuses that no one else will have access to. Visit www.sixfigurefreelancebook.com to discover how you can pre-order and send in your receipt to get special bonuses that will be revealed to you and sent to your email inbox on October 1st, 2020. This is in addition to the 17 worksheets and exercises that come for everyone who buys the book. And trust me, you're going to want these bonuses: tips on branding, pricing, sales calls, and so much more. I love that, because I think a lot of times when you first get started, we were talking about people who aren't sure if they're going to have this be their full-time business or if they're
Yeah.
even going to keep at it after a couple of months. But I always tell people, like, treat it like a business from day one. It's always going to be easier to just say, you know what, I'm essentially closing down this business. I don't love it. You don't want to be in the position of being 2 years in and going, I never made that business bank account. I had no idea how much my taxes were going to be. Like, it's always just easier to start on the right foot. So I'm really glad that that is your second piece of advice. What comes next?
Okay, so the next step is actually opening a tracking system or starting something for yourself. Now, some of the popular ones that you may have heard of are QuickBooks Online. There's another one called Wave Apps that's actually, it's a free system. A lot of people haven't heard of it, but it's actually a fully functioning accounting system. It's not as robust in some of the reports that they have, but I actually like it. I have a lot of smaller clients that are on it. And so QuickBooks Online, Wave Apps, I don't recommend a spreadsheet. I know that's kind of the go-to for a lot of people when they very first start. And I understand that if you have maybe like 4 transactions that you've done, you want to keep track of them somewhere. You have them on a spreadsheet. It's a little bit better than having them in the notes in your phone. But as soon as possible, you want to get on a true system because it's more than just tracking the expenses and the income. As you have your business, and like you said, you want to treat it like a business from the start, you need to think about some, perfect scenario, long-term goals. If it does become your full-time gig and it does become profitable and you start to grow it and you start to expand it, there's a million things that can happen. You may want to bring on investors. You may want to bring on partners. You may need to apply for a business loan down the road, or even sell the business at some point. If you get it to a multi-million-dollar business and you want to retire, you could sell it. But in order to do that, you have to know the true worth of it. And it almost starts at it does start at day one, really, to get that all in place. So it's good to go ahead and get that system going as soon as possible.
I love that. Okay, perfect. So we've got to have a system. You can always make it more complex as time goes on. Maybe, it has to be more than a spreadsheet ideally, but does not need to be like this fully functioning, super expensive thing that you pay for annually or every single month. As long as you have a good starting point, what is the fourth step in getting those finances organized?
Okay, so the next step that I have is knowing what is tax deductible for your business. There are common tax deductions across the board that every business can count. Unfortunately, the IRS, the way that it's set up for tax deductions is geared more towards brick and mortar businesses. So a lot of smaller businesses or online businesses don't really know what is applicable to them when they're looking at, rent and employee wages and all this stuff. So getting familiar with how some of those translate to some of the expenses that they're going to see in their industry, some things that are applicable to just the online space, and then also getting comfortable with what tax deductions are the best to watch out for. A lot of people are aware that business meals are not 100% deductible, but there are other deductions that are not 100% deductible. So some things are kind of weighted. There's a weighted scale, and just getting familiar with, if you have a choice, like some things to be compliant for legal and business purposes, there's actually multiple places you could put it. For example, business cards. You could actually count business cards as an office supply, or you could count it as an advertising cost. Advertising cost gives you a better tax deduction. So that's the better place to put it. And there's a lot of things like that. So that's one reason why I mentioned that as soon as you can, bring a bookkeeper on or have somebody looking at your bookkeeping so that they can make sure that on a daily basis, you're choosing the proper categories for all of your expenses. Because again, it builds off of there and it's going to save you the most in tax savings that way.
That's really smart because I think I've even fallen into that trap of, okay, well, all my expenses are created equal, right? And it's really about how you're categorizing things so long as you're following all of the rules and being compliant and things like that. One of my big wake up calls was my very first year of freelancing. It was a side hustle. I only did it for 6 months of the year. I found a qualified CPA, but he didn't have experience in home-based businesses or deductions for self-employed people. And so after the fact, a couple of years later, I did end up with an accountant who had that expertise. And they kind of told me, yeah, you overpaid by thousands of dollars because he didn't know how to properly capture all the right expenses to begin with, but also to categorize them. So I know for me, the software that I use to have all of my expenses come into it, it's tied to my PayPal account, it's tied to the business account, and it also makes it a lot easier to categorize them. And it kind of sorts for me at the end of the month what is uncategorized, so I can teach it, hey, this is advertising. If I'm specifically paying this thing every single month for a magazine article placement or ad placement, it will learn that. And it makes it that much easier come year end. Because this is having not captured it for a couple of years that way. I know I had to, tax time was a disaster. Okay, well, what was this $200 PayPal transaction for? And going back, and I find it a lot easier to do it on a monthly basis. Are there other tips around how often should we be looking at our finances as the freelancer and owner of the company?
Yeah, so I think monthly is a great place to start with it. If you have a lot of activity, if you have a lot of money coming in and out, I would definitely suggest at least twice a month or possibly even weekly. I know that sounds a little overwhelming, but you don't want it to get to the point where you go in once a month and you see all of this overwhelming amount of stuff. And so you don't do it at all, because a lot of people get to that point. So, but if you're fine with that, going in monthly, and if you're confident in the categories that you've chosen and you are, doing the things you're supposed to do in the software, one of the things that is really good to do is reconciling with your bank statements. So you're looking at the transactions and you're also looking at the bank statements. So you're confident in the totals of each category because they match the bank, and you're confident in the categories you've chosen, then you know that when you pull up your reports, it's 100% accurate and you can make good and informed decisions based on your numbers from that point.
And I think it's good for freelancers anyways to be doing it on a more regular basis, because if you're not tracking your pitching and your conversions in some other way, this is often the wake-up call of, oh my goodness, this week I tanked, or the last 2 weeks I didn't have the business that I thought, and I have projected expenses ahead of me that I might not cover. So it can often be that wake-up call of, I need to go out and actively market. I need to try to get in touch with that client who hasn't paid their invoice, those types of things. So that's awesome advice. What is our next step?
Okay, so the next step is kind of 2 in 1. It is don't forget to pay yourself and Uncle Sam. So one of the things that makes this easier is back in step 2, if you open up multiple bank accounts, you can go ahead and plan for these things. It's a lot harder, as you know, and I'm sure many of the listeners will understand as well. It's a lot harder to pay that huge tax bill if you've not been planning along the way. So another good time is on that monthly mark, going in and either moving money to the proper accounts for what you'll owe for taxes and what you can pay yourself, or going ahead and making those payments. Starting with paying yourself, there's no actual rules and restrictions surrounding paying yourself. If you are just a sole proprietor or single member LLC, a lot of people are scared to pull the money out because they think that it may affect taxes, or there may be some rules that they're not following. But you can really choose when, how much, how often, how you're paying yourself if you're set up as those type of businesses. It's just good practice to get it more consistent so that you can start to plan. And you just want to make sure that the system you use to pay yourself is something approved for business use. Like, you don't want to go use the Cash app to move money over to pay yourself. It would be better to do an electronic transfer directly from your bank account to your personal, or using PayPal Business if you need to do it that way, or even writing yourself a check. That would be better. you just don't want to use one of the systems that are designed for, friends and family and moving money around to pay somebody back for dinner, that they purchased for you. So that's around paying yourself. So that can calm some people's nerves down, realizing that there's not some big rule around that. And then the tax side of it is just, this is the most complicated thing, obviously, is figuring out how much you're going to owe in taxes and how you need to pay it, when you need to pay it, things like that. A very short, summarized, abbreviated, I guess, suggestion that I can give everybody here is when you get started with your business and you start making income in your business and you have expenses, a good rule of thumb, if you're not aware of your specific tax rate and your specific tax margins with your state and with the IRS, is to go ahead and save at least 30%. And when I say 30%, I mean 30% of net income. Mm-hmm. So you can take your income, you subtract all your expenses out, you have your net income number, and you multiply that by 30%. That should be on the highest end for most everyone. There are occasionally people that come up to about 31% at the end of the day. So you can look at, like, on your personal side, if you usually owe a lot in taxes on your personal side, then you may want to save a little bit more. But that's going to be a good place to start with it. And then working with an accounting professional or with a bookkeeper, they can help you determine more closely what your percentage is. I mean, they can be very random numbers. Depending on the person, it can be 18%, right. You could have 14%, but it really is dependent on your personal situation and your business situation. And then if you will owe, going ahead and making those payments monthly or quarterly is going to be very helpful for you in the long run.
Yeah, you definitely don't want to have to be playing catch up at the end of the year, especially if you did not set aside enough. I love that idea of the 30% too, because in a lot of cases, it's probably too much, but this is one situation where it always makes more sense to set aside extra. And if you come to the end of the quarter or year and you're like, hey, I have extra, if there were things that you waited to invest in, or you waited to pay yourself an additional bonus or whatever, or give your team members a bonus, that is the time when you can go, okay, like, I feel pretty solid, or I can leave this sitting in the business bank account for other expenses, but definitely not something where you want to keep it really low. And I think that one's hard for people because if you're coming from an employment situation, that's something that's pretty much taken care of by your employer. Like, you can push
kind of behind the scenes.
Right. Like, you can say, hey, take this much extra out or use this many different things if you want to. But most people are filling out that new hire paperwork and not asking for those things. So they're just kind of trusting the employer, hey, pull the standard amount out to cover me. And most people are also used to getting a refund. And so it can be quite different when you are switching over to having to make what feels like really big payments. Okay, awesome. Are there any other tips that we should have in mind, whether you're approaching your finances as an advanced freelancer or brand new?
Just making sure that you trust the professionals that you're working with, and not just trusting them, but you feel comfortable talking with them and that they have your best interest at heart, especially with small business owners. Even if you grow your business quite large, if it's mainly just you and you're kind of isolated as the business owner, even if you have employees or contractors, it's hard to make decisions alone and it's scary. So it's good to have a professional in your corner that you trust, because then they can start to help you in other ways as well, like helping with the marketing side, setting up a marketing budget so you're comfortable knowing how much you can spend in that way, helping you see where you can cut cost, advising you, like, this is a good time to set up your S Corp. This is a good time to find a financial advisor, just something like that. So even in the very, very beginning stages, at least getting someone that you can communicate with monthly or quarterly is a great idea.
I love that. And I have to echo it too, because it's really beneficial to have someone in your corner on all fronts. There have been many times when the IRS or a state revenue agency was confused about my income. My husband is W-2. I'm self-employed. It makes for kind of a mess come tax time. And one of the things that I love about the accountants that I work with is that they provide audit protection and IRS representation. So if you get that letter, you just scan it in your evidence to your financial professionals and say, let me know if you need anything else, but I don't have to be the one communicating this. And to me, that is well worth paying extra for every single year, knowing that they're going to handle that. So having the right team of professionals is just really instrumental. So try to find those people early on. And if you find somebody like I did that didn't have the right experience, be open to changing that. Thankfully, now there are lots of great qualified bookkeepers and professionals out there to help you. Well, Meagan, I know this was super valuable, even for me. So where can people go to learn more about you and the work you do?
Yeah, so I am all over Facebook. That is where I love to hang out. I have a Facebook group called Online Entrepreneur Connection. And that is a group where I do additional trainings on these topics and more, and just make sure that people are ready, knowing the information themselves, as well as knowing when it's time to find other people to help them in their business. So I would love to connect with you and your audience and just help you guys moving forward.